Last week, the entire crypto market was basically screaming for help. Bitcoin fell from 11,000 all the way down to briefly breaking 85,000 in just a few days. The speed was shocking, and the move didn't look like a natural correction at all. But let me clarify something first. Liquidation hunts didn't start last week. We've seen this pattern before. A sudden drop, leverage wiped out, and then the price slowly climbing back up. People were scared, but the market still held together. This time, completely different. This time, it was three things hitting together: liquidation hunts, dropping rate cut expectations, and full-on market panic. That's why the drop went so deep, so fast. Not a single event, but the entire market structure weakening at the same time. And today, I want to break down why Bitcoin collapsed through every major level, and whether even bigger moves could still be coming. The speed of this drop was so fast, the whole market couldn't react. 110K, then 100K, then 90K broke as well. Every support level, gone overnight. But the most important part is this. The shape of the move didn't look like a normal correction. It looked like something pushed by multiple players at the exact same time. It started with liquidation hunting. Then, rate cut expectations suddenly fell. And once 100,000 broke, panic selling hit instantly. Three forces stacking together, creating a straight down, no bounce move from top to bottom. If you look at the price structure, this drop actually started with something very classic: a liquidation hunt. So, what does that mean? Put simply, it's when bigger players take advantage of retail leverage, push price into the liquidation zones, and trigger waves of automatic forced selling. That's why the price can fall fast, very fast. And in the crypto market, the easiest product to hunt is perpetual futures. Perpetuals don't expire. People use a little money to take 10 times, 20 times leverage. The higher the leverage, the closer they are to liquidation. And the moment price hits that level, the system cuts the position instantly. And remember this part: these liquidation levels are fully visible. Big players see it. Mid-sized players see it. Even exchange APIs show them clearly. On top of that, market depth has been extremely thin lately. Buy-side liquidity is weak. So in this kind of environment, all it takes is a mid-sized player using some spot plus a little leverage to push through the nearest buy wall. And boom, a full liquidation chain triggers itself. Every time, someone pushes the first cut, and the rest is completed automatically by the market. That's why this initial drop was a textbook liquidation hunt, not a natural correction. Originally, this kind of move was something only the really big players could pull off. But in the Bitcoin market, the cost of moving price is way too low. So after a few successful hunts, something changed. Mid-sized players started joining in, and then smaller players realized, hey, they could do it too. And the result? More people pushing the price around, more people triggering liquidations, more people hunting the same levels, and the frequency of these moves just kept increasing. The market became easier and easier to sweep with a single push. You can put it very simply. Liquidation hunting didn't happen once. It became part of the market's behavior, a habit. After several sharp drops and multiple liquidation wipes, a huge portion of retail traders and short-term players have basically disappeared. They've been hit too many times. They're tired. They don't want to touch Bitcoin anymore. And you can literally see this in Google Trends. Public interest in Bitcoin has clearly dropped. And when retail doesn't come back, it means one thing: buy-side liquidity is thin. Rebounds are weak. Every time a major level breaks, nobody steps in. No one catches the fall. And eventually, the market becomes a closed loop. To be honest, this is one of the most important structural shifts in this entire downtrend. In theory, when major levels break, you should see new money coming in. But this time, nothing. And honestly, the reason is simple. First, rate cut expectations have fallen. The Fed made it very clear. Inflation still isn't back to target, and rate cuts may not come as quickly as the market hoped. So what happened? Capital flowed back into US Treasuries, not into Bitcoin. not into high-risk assets. Second, Bitcoin has no new story right now. ETF inflows have slowed. Retail is gone. New money isn't entering. Old players are scared to chase. Put these two things together, and you get a market that simply cannot bounce. That's why, after Bitcoin broke 100K, there was just nothing. No real recovery. No follow-through. No traction. There's a structural risk in Bitcoin that we really can't ignore, and that's one of its biggest holders, Strategy, formerly MicroStrategy. Yes, they reported a strong earnings result. But remember, that report covered data up to September 30th. Back then, Bitcoin was still above 110K. This entire BTC crash hadn't happened yet. In other words, the last quarter looked good not because there was no risk, but because the crash hadn't happened yet. And in the past few years, Strategy has relied heavily on issuing bonds, issuing new shares, and using their capital market tools to buy even more Bitcoin. So Bitcoin's price doesn't just affect their holdings. It affects their refinancing costs, their stock valuation, their ability to issue new shares, and investor confidence as a whole. If Bitcoin stays stuck between 80K and 100K, the impact of this drop will start showing up in their next earnings report. I'm not saying they're guaranteed to run into trouble, but that next quarter, that report, is going to be one of the biggest pressure points the entire market is watching. There's one scenario the market absolutely does not want to see, but it's a risk we have to talk about seriously. Because right now, Bitcoin's market depth is way thinner than in previous years. Perpetual leverage reacts too aggressively. Liquidity is fragile. Buy-side support is weak. And in this environment, if Strategy really comes under financial pressure and needs to reduce part of its Bitcoin holdings, the market will price it in immediately. You'll see people front-running it, selling before Strategy sells. And the selling pressure won't just come from Strategy itself. It will trigger a chain reaction. Liquidation cascades on perpetual futures. Late-night liquidity crashes. Whales getting caught short gamma. Capital flowing out into safer assets. Put it very simply, if Strategy starts selling BTC, the market cannot and will not treat it like nothing is happening. I'm not saying it's guaranteed to happen, but with today's market depth, today's liquidity, and the highly leveraged structure we're in, this could easily become the biggest stress test Bitcoin has ever faced since the day it was created. In the past few years, there's been more and more research discussing whether quantum computers could one day break certain encryption models. Now, the Bitcoin community does have countermeasures. There are theoretical ways to adapt if encryption standards ever change. But the real issue here is market psychology. Because once investors start thinking, hold on, if encryption technology evolves, could Bitcoin be affected? Even if the technology isn't actually at risk today, confidence can still shake. And that alone can become a long-term risk worth paying attention to. What I've said today isn't a prediction. I'm not telling you to be bearish. I'm not telling you to panic. What I want to point out is this. This recent Bitcoin crash isn't just about price. It reflects a structural shift happening inside the market, something deeper than what we see on the surface. Over the last few rounds, liquidation hunts became way too frequent. Retail traders got hit so many times they don't even want to come back. And if the market wants to heat up again, new capital is absolutely required. But remember, new capital has to be bigger than the money that's already in the market. And over the past 2 years, the money entering Bitcoin was already the biggest of the biggest. Countries, sovereign wealth funds, ETFs, public companies, institutional-grade capital. These are the largest pools of capital on Earth. So finding money even bigger than that, honestly, I don't see where it would come from. And on top of that, rate cut expectations are falling. Liquidity is turning defensive. Large holders like Strategy might face real pressure in their next earnings report. And further out, people are beginning to talk about quantum computers. All of these are long-term risks we simply can't ignore. So, will Bitcoin end here? Or will it go to the moon again? That's not a question we need to answer today. Bitcoin doesn't need conspiracies. It doesn't need stories. Behaviors that are profitable will always repeat. Behaviors that no one regulates will always get amplified. And at the end of the day, the market isn't driven by emotions. It's driven by capital. If you found this breakdown useful, don't forget to like and subscribe. I'll keep sharing clear, fact-based analysis to help you understand what's really happening in the global markets and how it connects to your own financial future. Stay tuned, because in a world this uncertain, having the right perspective is already a form of protection.